Every period of years throughout history since we've had this country and even in the human history, we've seen ups and downs in every market. Even back in the days where there was with tulips and with the Bronze Age and with the Greek society and with just history in general, the markets had moved up, they moved down, they've gone to extreme highs and they've crashed to extreme lows. Saw that in 1929. We saw that in 2000. We saw that in 2007. And the big question is it going to happen again? And the answer is probably, based on history. The question I have for you is, what are you doing to prepare for the next market downturn? Do you have a system in place to be able to navigate a storm in the stock market? I'm not talking about buying an annuity. I'm not talking about buying life insurance. I'm talking about being an investor in the stock market, having a system to be able to navigate extreme volatility. Did you know that that even exists? There's a lot of examples of it. All you have to do is just Google technical analysis. You'll see all kinds of charts and graphs. You'll see entry points and exit points and how to determine things called Elliott wave. But there's multiple ways out there that the engineers have thought up of to be able to look at momentum and trend and volatility and to make what they say are informed decisions as far as trading goes. I know if you're a diehard buy and hold investor, this is a blasphemous thing to say. The one philosophy of buy and hold is simply just one philosophy of investing. There are many ways to choose when to buy and sell. For instance, if you're a real estate investor right now, what are you thinking about the markets here in early 2025? Are you holding onto your property? Are you trying to sell your property now because interest rates are going up? Does that make you a market timer? Does that make sense to buy and sell houses? Or do you, as an investor in real estate, do you buy the house and intend to hold it forever? Well, the way that I think about it is like if you're an investor, doesn't that mean you buy low and you try to sell high? And as the market comes down again, then you buy it back in a low and then you try to sell high again. What a unique prospect. Even Warren Buffett. Take a look at Warren Buffett here in early 2025 and the reports that we see about Berkshire Hathaway and the immense amount of cash that's being raised, not just dollars, but percent of his overall portfolio. What is the method that that gentleman's using to be able to navigate through the market? Why is he buying so much cash? It's because it's part of his system. Some may agree with it, some may not agree with it. But if you're an advisor out there, or even if you're an investor out there that's looking for something that is better for you, that fits you better, that if you're questioning what you're in right now and why you're in it and why couldn't it be different, would you be open to a second opinion? Would you be open to understanding and learning a little bit more about how other styles of investment management may work? And all I'm saying is right now, with our current stock market valuation here in early 2025, things are definitely in a bubble by all intents. Just Google it, bubbles in the current stock market, and you'll see articles pop up everywhere. Now, the question is, we know the condition exists. Are there any things we can do to be able to work through it when that finally does burst? That's the big question for today. And that's what we help our clients understand.